How's it going, everybody? KCG Trades here, and in this video I want to switch things up a bit and actually do a trade analysis on a recent trade I made in Upstart Holdings, ticker symbol UPST. I just exited this position on Friday, and I really want to analyze my entries, exits, the reason I bought, the reason I sold, how I could do better, how I could do better in the future, as well as show you guys my process of how I actually trade, so when you guys watch my weekly watch list videos, you guys have a better idea of how I execute my trades. So let's go ahead and start analyzing UPST, looking at its chart here. Starting with August 11th is when the new trend basically began. We had an earnings gap up, huge gap up on the second highest volume day ever on this stock, and since then it went from 160 all the way to 400 in a matter of 2 months. This has been truly amazing, as this stock has gained over 100% in just 2 months, and the spectacular thing about this is this has been doing this during a market correction. If we take a look at the NASDAQ, which is the QQQ, we have been in a correction since September 3rd. This past week we just got back into a confirmed uptrend after its follow-through day, but throughout this correction, while the QQQ was below the 50-day, getting rejected by the 21 EMA, almost hitting the 200-day, UPST was actually continuing its trend, and it did consolidate just a little bit, but never went below the 21 EMA. So this was really telling us that this stock was displaying huge relative strength, that this stock is still a true market leader, and once the market was ready to rip again, this was ready to rip first and foremost, and that's exactly what it did this past week, going from 300 all the way to 400, a 25% gain in literally 5 days, which is spectacular. So this is why this stock has been so heavy on my radar, and I really wanted to take advantage as soon as the opportunity came. So if we take a look at the trade that I just made, I initiated a new position on October 11th, which was the Monday. If we take a look at the action here, it broke out of this wedge pattern here and just went sideways for 3 days in a row. It found support after 10 EMA, and the action was very, very tight, which is exactly what I like to see, because from contraction comes expansion. So when tight action happens, basically a bigger move is on the way. And if we take a look here, this was very small action, very tight action, consolidating, no selling was happening, and at the same time the overall market, the QQQ, was selling off. We actually filled that gap here, and we had a pretty bad day in the overall market. So the fact that the market had a volatile, pretty bad day, but UPST kind of just went sideways, didn't do much, was really telling me that when the market was ready to go up a little bit, this was gonna rip. So I initiated my position on the Monday. If you take a look here, I don't know if you could see, but these 2 arrows show my initial position. I took 25 shares at 309.852 and 15 more shares at 310.445. So essentially my average price was $310.074, and my stop loss was right below this small consolidation under the 10 EMA at 304. So my risk was about 2%, and since I had 40 shares in this stock, if I took a loss at 2%, the maximum I would have lost was $240. And all these numbers, the risk to reward ratio, I always calculate before actually taking the trade. So before I pulled the trigger and bought these 40 shares, I calculated what was my max loss, and I saw 240 as a very attractive number, maximum dollar amount, or 2%, which is a very attractive number, keeps your risk very low but your opportunity for reward very high. So these are the specific situations that you really want to take advantage of. When you could get a high possible reward for a low risk, you want to take it every time, especially for a true market leader stock. So now that we have everything calculated with our stop loss, with our entry point, with our maximum loss amount, now it's time to manage the trade. So if we take a look here, right after I bought, the next day it broke out of this sideways consolidation on good volume, went from 317 all the way to 336, and it actually closed at 333. And if you take a look, if you see these arrows here, yes, I did sell partial of my position. I sold 25 shares out of my 40 shares at 334.07, so about a $24 gain per share. Now you may be asking why I sold this position so quickly, especially because I was just mentioning it's a true market leader. It's breaking out while the market is in correction. This is doing well. The reason I sold it is because I took a look at the market, and the indexes really got to me. So Monday, October 11th, when I bought my initial position on UPST, Tuesday we had a pretty ugly day as well, got rejected by the 10 EMA and went lower than Monday's low, which is never a good sign. So for me personally, I thought we were going to roll over and continue to go down, possibly get some double bottom action. So I didn't want to lose my profits in UPST, which is why it's sold partial positions. Obviously now looking back, hindsight's always 2020. This was a bad decision, but in terms of my sell, I got 4-to-1 risk to reward ratio, which is always a good trade. I couldn't be mad at it. Obviously there was some FOMO, stuff like that, because of the fact that it had a huge run up towards the end of the week, but the fact I still had 15 shares made me feel a little better. So I sold 25 shares, as I mentioned, for a $24 gain per share, and for the next few days it just continued higher. So I really wanted to let this stock work for me. I didn't want to sell too early once again, and especially when the overall market recovered on the Wednesday. We had a nice day on Wednesday, and on Thursday we had a nice gap up with follow through, and Friday we had another gap up with follow through. This got me confident that UPST was going to keep going, and that's exactly what it did on Wednesday and Thursday. We had a huge day on Thursday on huge volume, going up to 381, and that's where I didn't want to sell just yet, because if I sold, I knew we might go for a gap up again on Friday because of all the strength that was coming in. That's exactly what we did. If we take a look at the 15-minute charts here, I'll actually break it down, everything that I did. Starting with my entry point here, you see the tight consolidation in the 15-minute charts. I got in with a very tight stop at 304, and since then it was just ripping higher and higher. I got out at 394.80 and 394.666 for 15 shares. That's my final exit on the 15-minute charts. The reason I exited, because one, we were extended from the 10 EMA. If we take a look here, 10 EMA is here, and the overall stock price is at the 400s. So 341 all the way to 389. Let's just use that. That's about a 12% gap between the 10 EMA and price. Anything over 5 to 7% is where I get a little cautious. So this was 12%. So I decided to take some profits here. Also, the reason I decided to take my profits is because in the overall market, we had 2 gap days in a row, and we also hit the 50-day moving average. So that might act as a resistance point. Obviously, I don't know what's going to happen in the next few days. We could obviously continue to just go higher, or we could fill these gaps, go sideways, and kind of just consolidate for a bit. But in terms of myself, as I mentioned, I like to take profits around the 10-15% zone, plus the fact that this stock is a bit extended, and the fact that the overall market could be due for some consolidation or for some slight pulling back. I personally didn't want to lose my current profits, and if it does set up again to go higher, I could always get back in. I'm not worried about buying in at a higher price. And as a trader, you have to be okay with that. You have to have certain rules for yourself, and for me, I like to take profits 10 to 15%. Yes, that means I do miss those 100% gainers, but for me, 10 to 15% gainers over time, continuously really compounds your account, and that's what I like to do. I suck at holding stocks. I suck at holding those pullbacks. That is not my personality. I'm not built for it. So for me, I like to do what I can, do what works for me, and that's exactly what I did. So for this stock, like I mentioned, I sold at 394.80 for 10 shares, and I sold at 394.666 for 5 shares. So in total, I sold all of my shares for a profit of $1,871.07 for a total return of 15.09% to be exact, in 4 days, 4 or 5 days. So I can't complain about that. In total, I risked 2% to make a gain of 15%. So my risk to reward ratio was 7.5 to 1. And if you know math, you know that's an amazing ratio, and that's exactly what I'll try to do every trade. Obviously, not every trade will work out this great or this fast, but when they do happen, you really want to take advantage of it, and that's what I did. If it continues to go higher, then so be it. I'm going to miss the move, but I'm happy with my current trade, and on to the next one. So that pretty much sums up this video. Leave a comment down below if you guys like this type of video and want me to do more. I will do all types of trades, including losses. If you haven't already, hit that like button. I am about 37 subscribers away from 1,000, so if you guys could help me out, if you're watching this and you're not subscribed, hit that subscribe button, get me to 1,000 subscribers. I'd really appreciate it. Share this video with your friends, with your family, anyone who you think would benefit from this video, and hope you guys have a wonderful week in the markets. Take care. Have a good one.